What's up, everybody? The housing market can't get much worse from here, and the sales slump will last a long time, according to REDFIN CEO Glenn Kelman. It's been a slow-building disaster, the real estate brokerage's chief said in an interview with CNBC's Squawk on the Street. The housing market is just taking a beating because affordability is at a 4-decade low. The Fed has been raising interest rates to curb inflation by slowing down the economy. This presents many challenges, especially for home buyers who are facing the highest interest rates in more than 2 decades. With the 30-year rate nearing 8%, a far cry from the sub-3% rates of the early pandemic. At the same time, according to Redfin's latest housing market updates, the median home sale price is up 3% year over year, and the typical home buyer's monthly payment is at a record high. Black Knight, a real estate analytics firm, reported the average monthly principal and interest payment for buyers hit $2,306 in July, the highest on record. That's up 60% from 2 years ago. So with all this data showing us just how bad the affordability crisis is right now, what do the experts think will happen in the future? Will home prices soar or will they plunge? So today we'll take a look at an article in Business Insider by Farhan Mohammed titled, "Will U.S. House Prices Soar or Plunge?" These 5 experts are divided, and see what they're saying. So let's dive right in. We're all aware by now that potential home sellers are reluctant to give up their low interest rate and then go buy something new with a much higher rate, therefore causing a shortage of inventory. This shortage has kept home prices high, even with the drastic uptick in mortgage interest rates, by causing competition for the good houses that do hit the open market. And by good houses, I mean those houses that show well and are priced right. But can the U.S. housing market withstand this affordability crisis without something cracking? Jeremy Grantham, Barbara Corcoran, David Rosenberg, and some other experts have shared drastically different outlooks on the future of home prices. So here's what they said. Jeremy Grantham, the co-founder of the investment firm Grantham, Maya, Van Otterloo and Company, or GMO, made his name predicting the dot-com crash of 2001 and the global financial crisis of 2008. In a recent interview, Grantham warned that real estate is in a global bubble and the cost of homes has soared to unsustainable highs in multiple countries. If you can afford to pay more for your house because the mortgage rates are 3%, sooner or later you pay more for it. And so the competition bids the price up to fill the available affordability. Now the mortgage rate is 7%. The same thing will happen in reverse. It doesn't happen overnight, but you can be absolutely certain that it will. When asked about the future of home prices, Grantham's prediction is pretty dire. House prices will come down. 30% would be a pretty good guess, he said. Next, we have Barbara Corcoran, the Shark Tank and real estate tycoon. Corcoran predicts that home prices will surge once the Fed cuts rates and mortgages are cheaper. She thinks that prices will go up 15 to 20% and recently argued that the shortage of homes on the market will fuel further price growth. No inventory is like an insurance policy, Corcoran said. If you don't have enough houses to go around, prices continue to go up. There's nothing that's going to make more houses available while interest rates remain high. She differentiates between residential real estate and commercial real estate, citing that the recovery of one doesn't necessarily mean the recovery of the other. She believes it could be a really long time before commercial real estate rebounds. No one has the confidence to buy commercial real estate now, Corcoran said. No one really believes it's going to turn the corner. Our best offices in Midtown Manhattan are 50% occupied, and in most major cities and even secondary cities, we have a 20% vacancy rate. I don't see that turning around. I think it's going to be a bit of a bloodbath before it gets better. David Rosenberg, founder of Rosenberg Research and former chief North American economist at Merrill Lynch, believes the U.S. economy is barreling towards a recession that will hammer stocks, houses, and other assets. The recession has been delayed. It has not been derailed, he said, noting that historically it has taken an average of around 2 years for a recession to begin after the Fed's first interest rate hike, and the central bank started the current hiking cycle roughly 16 months ago. When speaking about the housing market, he said that houses prices have only climbed recently because supply has dropped even more sharply than demand has. We've created a really sclerotic housing market, he said. Rosenberg told Insider that house prices could plunge as much as 25% from their peak last year. We already mentioned Glenn Kelman, who believes that the housing market has hit rock bottom. In his words, the only relief is that it can't go much lower. Kelman noted that he's going to continue to lay off employees in order to survive in this tight market, and had this to say in a recent interview. Remember when Rambo was asked, "Rambo, how would you live?" And he says, "Day by day." That's how we're planning this business, Kelman said. Good to know that Kelman's up on his movie quotes. Vincent Deluard, the director of global macro strategy at StoneX Group, believes the frozen housing market will ultimately thaw, as homeowners can't hold off selling forever, and that home prices will drop when it does. Look at the real estate market. No one wants to sell, Deluard said in a recent Real Vision interview. But eventually, people switch jobs, move cities, get divorced, die, he continued. That will bring prices down. Ultimately, they all believe that home prices will change as soon as more inventory comes on the market. It just depends on if you believe that home prices will go up, like Corcoran, or go down, like Rosenberg and Grantham. And honestly, it could be a mixture of both, since we have such a divided housing market. And Redfin's latest housing market update for the 4 weeks ending September 24th, the metros with the biggest year-over-year home price increases are Anaheim, California, up 14.2%, San Jose, California, up 10.6%, Fort Lauderdale, Florida, up 10.5%, New Brunswick, New Jersey, up 10%, and Newark, New Jersey, up 9.8%. And the metros with the biggest year-over-year price declines are Austin, Texas, down 4.4%, Houston, Texas, down 2.2%, San Antonio, Texas, down 1.7%, Fort Worth, Texas, down 1.6%, Las Vegas, down 1%, Phoenix, down 1%, Nashville, Tennessee, down 0.7%, and Dallas, down 0.1%. It's interesting that most of the metros with the biggest home price declines are located in Texas. And as far as inventory, new listings of homes for sale are down 6% year over year, and active listings are down 15% year over year. New listings are down in all but 10 metros, with the biggest declines in Atlanta down 30%, Las Vegas down 17.7%, Riverside, California down 17.6%, Portland, Oregon down 16.4%, and Newark, New Jersey down 16.2%. The only metros that new listings increased are San Jose, California, up 7.2%, West Palm Beach, Florida, up 4.1%, Miami, Florida, up 3.6%, Cleveland, up 3.6%, San Antonio, Texas, up 3.3%, Cincinnati, up 2.8%, Minneapolis, up 1%, Pittsburgh, up 0.7%, Houston, up 0.5%, and Fort Lauderdale, Florida, up 0.1%. This is actually pretty interesting because they are all over the country, from the Northeast to the Southwest. Homes sold in a median of 31 days nationally, and 32% of homes sold above their list price. 6.5% of homes for sale each week did have a price reduction. And as far as months of supply, according to Redfin, we have 3.2 months, the highest level since February. Just for context, they say that 4 to 5 months of supply creates a balanced market. So in most parts of the country, we are still in a seller's market. But what's happening where you guys live? Where I am here in the DC area, it's literally house by house. One house can be selling in multiple offers way above asking, and the other house will be sitting on the market and getting its price reduced week after week. If you want to see more house price predictions, like from Zillow and Morgan Stanley, definitely check out last week's video. Thanks for watching. I do appreciate it. Bye!